with the earnings, then Infosys is also set to report its Q4 results with steady numbers in store. The constant currency growth is likely to be in a 3 to 3.5% range, while the seasonal weakness may weigh on the dollar revenue. My colleague Darshita is now joining us with what to expect.
Starting with Infosys, where the quarter is expected to be weak on growth but relatively stable on margins. Let's look at the top line first, where the dollar revenue is expected to see a decline of about 2.2% QOQ. Now, this is largely driven by the seasonal weakness. However, looking at the rupee terms, the revenue can still see a modest uptick of about 1.4% QOQ, supported by some currency tailwinds. Moving on to the margins, the EBIT margins are expected to remain broadly flat at around 21%. While the currency provides some support, this is likely to be offset by bonus payouts and higher visa cost, keeping the profitability range bound. That said, the PAT is expected to rise sharply, up about 13% QOQ, helped by a lower base. On the deal front, TCV deal wins are expected to come in the range of about $2.5 to $2.75 billion, indicating steady but not an accelerating demand. In the terms of guidance, the company had mentioned about the 3 to 3.5% constant currency growth for FY26, with the margins in the range of about 20 to 22%. The street will watch for any changes in here. Finally, looking at the key monitorables, the FY27 growth guidance, which is expected to come in the range of about 2 to 4%, commentary on the GenAI impact on growth and margins, and the progress on the large deal execution under Project Maximus. So overall, a quarter where the growth remains weak, margins remain steady, and the commentary will be crucial.
All eyes will be on Infosys. It is all set to report its numbers post-market hours today. But that's all the time we have on this edition of the show. Thanks so much for tuning in. Closing trades will come up next.